Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Alphabet. Personalization is a distinct AI game changer. This article was written by Summit Research. Summary. Alphabet Inc. Google. Valuation continues to surge to new all-time highs, underpinned by consistent execution across its AI roadmap. This is evidenced by strong Gemini 3 reception, accelerating momentum in 7th-gen TPU deployments, and improved AI monetization visibility reinforced by Google Cloud's recently expanded partnership with Apple. Yet the rally continues to underappreciate a key catalyst: personalization, which was evidenced in Google's back-to-back launch of 2 new personalized Gemini capabilities earlier this month. Deeper personalization is reinforcing Google's core advertising moat by expanding commercial query volumes, improving advertiser ROI, and supporting margin-accretive monetization across search and YouTube. Personalization is also emerging as a full-stack growth lever across Gemini and Google Cloud, underscoring a structurally improving AI ROI profile as management kicks off 2026 expectations at Google's upcoming Q4 earnings update. Alphabet Inc. Google, aka Google stock, continues to forge new all-time highs into the new year, despite resurfacing volatility across the broader AI trade. While growing investors' concerns about the durability of the industry's lofty AI spending plans and limited visibility over longer-term AI returns have weighed on the performance of peers like Microsoft Corporation, MSFT, Google's rally continues to be underpinned by tangible fundamental support. As discussed in my recent coverage of the stock, durability to Google's premium continues to be anchored by execution consistency across multiple upside catalysts, including robust Gemini 3 adoption and strong 7th-gen TPU momentum following the purpose-built instance's recent general availability. This is further reinforced by broadened AI distribution and inadvertently monetization following Google's partnership with Apple Inc. (AAPL) to deepen Gemini and Google Cloud technology integration across the iOS installed base. As the stock approaches my upside scenario price target of $339, reflecting execution on existing AI monetization avenues, the key question heading into Q4 earnings is whether Google has additional structural levers to catalyze a further re-rate higher, and its recent product rollouts suggest a greater focus on penetrating personalization opportunities ahead. Historically, management has only made direct reference to personalization about a handful of times in recent commentary, 3 times in Q2 earnings and 4 times in Q3 earnings. Yet Google's back-to-back introduction of personalized intelligence and auto-browse earlier this month highlights a deepening push into related user-specific agentic AI experiences. This could be a game-changer for Google's AI monetization roadmap, as it leverages its distinct first-party data advantage against rivals like OpenAI to further accelerate user acquisition and increase retention in mass-market consumer use cases. In the following analysis, I first explain how Google is scaling personalization across its portfolio offerings. Then, I will discuss why the associated opportunity remains underappreciated in the AI monetization assumptions currently embedded in the stock's premium. Looking ahead, I expect personalization to emerge as a core pillar of Google's AI roadmap and monetization strategy. Management's likely to devote greater airtime to this theme as they kick off 2026 expectations at the earnings update later this week. Personalization in advertising. AI-enhanced personalization is taking on a more pervasive and prominent role across Google's core advertising surfaces. This has accordingly reinforced the durability of its advertising moat, reversing earlier investors' concerns that generative AI would structurally upend its core business. As discussed in my previous coverage, Google's execution in adapting search advertising for the AI era, centered on personalization, is actually increasing its exposure to commercial query volumes. This has effectively improved advertiser outcomes, while also supporting incremental monetization rather than cannibalization for Google. Specifically, the integration of AI overviews and AI mode in native search has expanded Google's reach into queries with high commercial intent. AI overviews now reach over 2 billion users, with ads integrated below and within related responses, now generating comparable monetization rates as traditional placements in regular search results. The durability of this shifting search ad monetization dynamic is further corroborated by meaningful sequential inquiry growth on AI overviews observed in Q3, directly countering earlier concerns that generative AI would upend Google's search ad monetization strategy. Meanwhile, AI mode is also driving incremental complements to this dynamic. Specifically, AI mode now generates incremental commercial query exposure for Google search, rather than simply redistributing existing demand across features. In its core US market, AI mode continues to demonstrate strong and consistent WW usage growth, with queries on the platform doubling sequentially in Q3. The product has also successfully scaled towards more than 75 million daily active users, DAU, highlighting strong resonance with users and adaptability to evolving consumer search dynamics in the AI era. The growing engagement profile, enabled by the native integration of AI overviews and AI mode within search, accordingly creates a favorable setup for additive monetization opportunities enabled by AI-driven personalization. Specifically, Google's been gradually expanding ad placements within AI mode to better capitalize on the format's increasing commercial queries, complementing new monetization opportunities generated from AI overviews. This includes the recent pilot introduction of direct offers in the US, an AI mode-specific ad offering that allows brands to serve personalized discounts based on AI mode queries. The new retail-centric ad feature is consistent with management's intention to expand shopping capabilities within AI mode, with a focus on delivering personalized offerings to optimize engagement and conversion into monetizable growth. We recently added shopping capabilities in AI mode, which now help people shop conversationally in search, and we expanded try-on capabilities to more clothing items, now available to anyone in the US. Lastly, we're making it easier for consumers to benefit from deals through new loyalty offerings like personalized annotations on organic results and ads. Source: Google Q3 2025 earnings call transcript. As discussed in my previous coverage, Google has already recently introduced AI Max to better capitalize on shoppable opportunities in AI mode. Specifically, AI Max is Google's latest AI-enhanced ad solution, curated to broaden advertisers' reach into incremental search opportunities by dynamically adapting and matching campaign assets with previously unreached, yet high-intent queries. Direct Offers is expected to complement AI Max by further optimizing ad conversion and performance through more personalized delivery to relevant audiences. And the effectiveness of this approach is corroborated by recent holiday shopping trends. Specifically, recent data shows that nearly a third of consumer queries on AI platforms during the holiday shopping season were focused on deal finding, with about 20% related to product discovery. This accordingly exemplifies Google's advantage with AI-driven personalization to speed up the product discovery to conversion process, improving value for both consumers and advertisers, while reinforcing search's leading reach and monetization across digital queries. Using our most advanced AI models, we can understand and predict intent like never before, unlocking entirely new commercial pathways to provide valuable new consumer connections and helping us monetize even more efficiently. Source: Google Q3 2025 earnings call transcript. And this efficient monetization pathway is already tangible from the advertiser front. As management disclosed during the Q3 earnings update, AI Max has already unlocked billions of net new queries while improving relevance and, inadvertently, conversion. In the latest update, Google has disclosed that AI Max for search campaigns is already delivering 27% more conversions at a similar cost per ad or return on ad spend compared with campaigns that mostly use exact and phrase match keywords. This represents a substantial improvement to the case study shared by management in October, which highlighted a 12% increase in conversion value for Kayak under initial AI Max adoption. Taken together, the results demonstrate how Google Search continues to adapt effectively to evolving AI-era consumption patterns by leaning into personalization and its first-party data advantage, reinforcing the durability of its ad moat. Meanwhile, for Google, These results also underscore increasingly margin-accretive dynamics. The native integration of AI features into search is not only increasing search ad TAM by increasing commercial query volume, but it's also enabling Google to better capture additive growth through AI-enhanced ad products like AI Max and direct offers. More importantly, the value proposition offered to advertisers is already translating into improved ROI visibility for Google. This is corroborated by the simultaneous acceleration in both ad engagement volume and pricing, as evidenced in the 7% YY increase in Q3 paid clicks, which is accretive to 4% YY growth year to date, alongside the 7% YY increase in cost per click for Google Search. Looking ahead, robust holiday season shopping trends are likely to further this momentum, underscoring prospects of better-than-expected Google Search ad revenues at its upcoming Q4 earnings results. And incremental upside to forward growth estimates could underpin a further valuation re-rate from current levels, reinforcing Google's personalization strategy as a key catalyst for the stock. Personalization in Gemini. Google's increasing personalization-driven AI monetization opportunities are furthered by its recent introduction of personal intelligence and auto-browse, both powered by Gemini. Personal intelligence is a new agentic feature within the Gemini app that's plugged into user-authorized data across Google's ecosystem, spanning Gmail, Search, Photos, and YouTube. By processing related data with Gemini, personal intelligence is capable of generating better personalized responses to queries. This is a structural advantage for Google, given the sheer breadth of its first-party database, which few rivals could replicate. Meanwhile, Auto-Browse takes this agentic feature further beyond the Gemini app, with native integration into the Google Chrome browser. Specifically, Auto-Browse is a Gemini-powered agent embedded within Chrome that can help users navigate and complete tasks, such as shopping and trip planning, without having to leave the browser. Both features are currently in limited availability to US AI Pro and AI Ultra subscribers, with Google intending a broader rollout to other subscription tiers and countries soon. The back-to-back rollout of personalization-focused agentic capabilities underscores Google's growing ambition to accelerate its reach into AI-driven commerce transaction flows, rather than remaining confined to the query-based discovery layer where monetization is largely driven by ads. This is further reinforced by Google's recent introduction of the Universal Commerce Protocol, UCP, an open-source agentic commerce interface that standardizes integrations between different consumer surfaces and ecosystem players. UCP is currently adopted by key digital commerce and payment solution providers Shopify Inc. at Shop and PayPal Holdings Inc. (PYPL). These partnerships aim to enable seamless merchant integration across Google's AI surfaces, such as AI Mode in Search and the Gemini app, while ensuring consumers can complete the checkout process without having to leave those interfaces. In essence, personal intelligence and auto-browse address the upper funnel of the agentic commerce process by personalizing product discovery in response to queries that exhibit commercial intent. Meanwhile, UCP reinforces conversion by materially reducing friction at checkout. This is a critical prerequisite to addressing structural inefficiencies currently observed in e-commerce. Specifically, more than 70% of e-commerce shoppers abandon their carts, with nearly a fifth doing so because of friction during the checkout process. Industry estimates that cart abandonment is accountable for $18 billion in lost e-commerce sales every year. This highlights the underserved opportunity that Google's deepening foray into agentic commerce can address with Gemini-powered personalization and UCP. More importantly, Google's AI-enhanced direct offers ad feature, discussed earlier, is also being piloted with Shopify merchants, effectively reinforcing the flywheel between personalized discovery, advertising, and conversion. And Google's readiness to capitalize on emerging agentic commerce opportunities is further amplified by its recent partnership with Apple, which expands its reach into a more affluent iOS installed base. As discussed in my previous coverage on the stock, Google remains the only AI-capable search engine with mobile majority, a critical advantage given that the majority of commercial queries occur on mobile surfaces. Specifically, more than half of global retail e-commerce sales now happen on mobile surfaces, while more than 3/4 of online purchases in the US are completed on smartphones. it's evident that Google's increasing integration of personalization directly into Gemini's workflow will be critical for advancing its agentic commerce ambitions. In addition to reinforcing Gemini's stickiness across Google's ecosystem installed base, AI-enabled personalization is also expected to strengthen new user acquisition and retention by widening its competitive advantage against rivals like ChatGPT. Meanwhile, AI-enabled personalization is also expected to unlock incremental monetization avenues for Gemini at scale, bolstering the platform as a central component of Google's expanding agentic commerce strategy, an additive consumer monetization catalyst beyond traditional advertising that remains underappreciated. Personalization in Google Cloud. The accelerating shift towards personalized agentic AI applications is expected to represent an additive growth catalyst for Google Cloud as well. Specifically, personalization is expected to increase the relevance of AI applications and reinforce mass-market adoption, effectively furthering the shift in compute dynamics towards high-volume inference workflows. And Google Cloud's differentiated infrastructure portfolio makes it well-positioned to capitalize on this dynamic. Specifically, personalized AI and agentic experiences will inevitably heighten the need for continuous inference due to consistently tailored query responses. This accordingly spurs market demand for token spend optimization and cost predictability, which increases the appeal of Google's purpose-built TPU systems. As discussed in my previous coverage on the stock, Google's 7th-gen Ironwind TPU is optimized for inference workloads. This accordingly entails competitive performance per dollar when compared to instances powered by merchant GPUs like NVIDIA Corporation's NVDA Blackwell systems, especially when paired with Gemini-based workloads, thanks to vertical integration advantages across Google Cloud Platform (GCP). As Gemini's personalization capabilities and first-party data advantage increasingly align with enterprise agentic deployment strategies, the LLM is well-positioned to capture a growing share of AI workloads. This should translate into incremental demand for TPU instances, as enterprise IT spending environments increasingly prioritize cost-efficient inference. Meanwhile, the dynamic could also accelerate higher-margin infrastructure monetization for Google Cloud as TPU utilization scales. Increasing focus on AI personalization and agentic deployments is also expected to reinforce multi-cloud adoption dynamics. As enterprise spending environments scale AI initiatives, cost efficiency and reliability become increasingly critical consideration factors, which multi-cloud strategies are primed to address. This accordingly bolsters GCP's appeal, which is evident in current industry forecasts. Specifically, RBC Capital Markets' 2026 CIO survey indicates that GCP's share of the secondary cloud service provider (CSP) market is expected to reach 23% in 2026, up from 20% in 2025 and 14% in 2022 during the early stages of generative AI adoption. This accordingly reflects a steadily narrowing leadership gap held by rivals Microsoft Azure and Amazon.com Incorporated, AMZN Amazon Web Services. It's evident that GCP is increasingly benefiting from personalization-driven AI workloads that prioritize token spend efficiency, which is realizable through broader adoption of the TPU Gemini stack. Fundamental and price implications. Taken together, I'm increasing my upside scenario price target for Google to $360 per share, previously $339 per share, to reflect incremental growth opportunities unlocked by deeper personalization across its full-stack AI strategy, spanning products and platforms, e.g. AI Mode and AI Overviews, models, e.g. Gemini, and infrastructure, e.g. TPUs. The upside scenario price target considers long-term revenue growth at a 4-year compound annual growth rate of 16.8% through 2030. This compares to the base case forecast's long-term revenue growth projection at a 4-year compound annual growth rate of 14.8% through 2030, with the upside scenario's top-up primarily reflecting additive opportunities stemming from Google's increasing integration of AI-driven personalization across the stack over the near to medium term. This is expected to enhance Google's long-term operating leverage improvements and yield incremental unit economic benefits at scale, supporting upside scenario operating income expansion at a 21.4% compound annual growth rate over the forecast period, base case 18.9%. Under the discounted cash flow DCF approach, these upside scenario fundamental projections result in an estimated intrinsic value of $360 per share for Google, reinforcing the durability of the stock's current levels as its upcoming earnings update approaches. The DCF analysis considers a terminal value of $5.1 trillion, which is derived by applying a 3.5% perpetual growth rate on projected 2030 EBITDA. The 3.5% perpetual growth assumption reflects the rate of anticipated long-term economic expansion across Google's core markets and underscores the pace at which its steady-state cash flows during the mature business cycle, proxied by terminal EBITDA. Total cash flow projections, including the terminal value, are discounted at a WACC of 9.1%, which is consistent with Google's capital structure and risk profile. Final thoughts. Taken together, I expect durability to Google's current rally heading into its Q4 earnings update later this week, given increasingly tangible fundamental support from underlying business execution. Specifically, much of the stock's recent appreciation continues to be backed by execution consistency across established AI monetization avenues, primarily in core search advertising and GCP share gains, with visibility reinforced by the recently forged Apple Gemini partnership. However, it's likely that the deepening integration of personalization across Google's full-stack AI ecosystem remains underappreciated, highlighting prospects for further valuation upside from current levels. More importantly, deeper personalization is also creating a structural flywheel that effectively reinforces both revenue durability and ensuing margin expansion at scale. This is critical to driving sustained earnings accretion amid Google's elevated AI CapEx spend trajectory, keeping its prospective AI returns intact and mitigating risks of ROI erosion, an outcome recently displayed at Microsoft, where increasing CapEx and a limited corresponding uplift to forward growth signaled ROI compression risks and deteriorated investor confidence. Although Google remains exposed to the same portfolio of execution challenges I'd discussed in the previous coverage, spanning heightened antitrust scrutiny, competition, and other external macro factors, personalization adds an incremental layer of de-risking to the company's AI monetization outlook. This, accordingly, reinforces Google's upside scenario, as accelerating personalization across its full-stack AI offerings drives deeper adoption and improves monetization visibility, underscoring potential for further appreciation from current levels. This article was written by
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.